welcome in, though, Jenny Horne, markets correspondent, to get a closer look at Shopify. We've got Shopify in focus this morning off the back of its latest quarterly numbers. The stock is under some pressure, though, right now in the pre-market. Take us through some of the numbers, because I can't quite get a handle on the reaction, Jenny.
I know, I agree with you, Diana. At initial glance, you'd say that this report crushed it. I mean, the stock has been pretty parabolic as of late, so that could also be weighing into some of the selling this morning. But we saw revenue shot up around 31% year over year in the fourth quarter, accelerating from the 24% pace of growth we saw in the same quarter last year, which is hugely encouraging. That not only is growth continuing at that double-digit clip, but it's accelerating, something we really haven't heard from a lot of these companies yet this quarter. Fourth quarter did also mark the company's 7th consecutive quarter of 25% or greater revenue growth, while excluding logistics. Their gross merchandise volume rose 26% to $94.5 billion. Also beating consensus, their monthly recurring revenue was up 24% to just shy of $180 million during the quarter. Consensus was around $182 million, so that was a slight miss. But operating income was up around 61%. Free cash flow rose another 37% year over year to $611 million. And they highlighted they were able to grow their free cash flow margin sequentially each quarter of 2024, reaching 22% then in the fourth quarter. Gross merchandise volume also accelerated each quarter, achieving that 24% increase in the past year, marked by their highest gross merchandise value in about 3 years. So they highlighted the consistency of the results, and now do see first quarter revenue growing at the mid-20% rate at a year-over-year basis. Gross profit dollars also expected to grow at a low 20s% rate. Operating income as a percent of revenue also expected to fall between 41 and 42%. So high valuation, I think, is what's right now causing the stock to face a reality check, because frankly, Diane, there was very little to be concerned about, especially regarding its growth and future plans for growth within this report.
Yeah, now that makes more sense when you look at how the stock has performed, especially compared to the numbers, because it looks like, and look, it's not down as much as it was in terms of the pressure. So it could certainly turn around once the market opens. I mean, look, it's got double-digit gains year to date. It's up more than 30% year over year. So it has had a strong year. So maybe some of this is the buy the rumor, sell the news kind of action. Anything else stand out to you? Are you seeing some analyst commentary off the back of these numbers, Jenny?
So far, the initial, read is pretty strong here. So we did see tariff risks actually do remain somewhat of a concern. That was something that was mentioned by a few analysts, which I think right now that's, you could say, broadly speaking, a concern for the entire economy. But that was something that was mentioned that management didn't really allude to specifically, which I thought was interesting. The sell side still really likes this name. They're initiating a more and more upside around their first quarter outlook. That was huge. I also think that something that we could say now, because we've heard of it from multiple companies, is the nature of this market right now is being very much rewarding of e-commerce. Like, we've seen strength with Amazon's e-commerce business. For the first time, it feels like the streets paid attention to that over AWS in years. We also do have reports due in the next coming weeks with Walmart, Home Depot. I do think the e-commerce exposure has been given an interesting element of retail earnings, especially considering now Shopify is showing double-digit percentage growth with no pace of slowing, also signaling strength in that e-commerce world.
You make a great point about sell side. You got Citigroup maintaining their buy rating on Shopify and boosting their target this morning to $175 a share. So they certainly see more ramp from here. And then this JP Morgan Chase, this was ahead of the quarterly numbers. JP Morgan had said they would be buyers on weakness, bullish on its margin expansion opportunity long term. So to your point about where the sell side community is with this, at least in the early act, JP Morgan Chase, their commentary was before the results. Citigroup new commentary this morning. So it looks like, we'll see how this actually performs once Shopify opens for regular trading. Thanks a ton. Jenny Horne, co-host of Next Gen and markets correspondent.